Hey everyone, and welcome back to my channel. If you're thinking about selling a home, buying or selling a home in Greater Phoenix, you're going to want to hear this. The market is shifting and fast. Whether you are a buyer looking for a deal or a seller wondering if now is the time to sell, I've got some latest data and trends and that's going to help you make those smart moves. So buckle up, let's check it out. All right, buyers, listen up, because the window of opportunity might be closing sooner than you think. The Crawford Market Index, which I reference quite a bit, especially if I'm talking to you one-on-one or if we're having a Zoom call, I mention the Crawford Market Index, the CMI. And that really is a good source of trends and data to be able to share when we're talking about buying or selling in Greater Phoenix. So here's how it works. If you have a number that's below 90, it's a buyer's market. Anything between 90 and 110 is considered a balanced market, and anything over 110 is considered a seller's market. So think of a bell curve, and 100 is straight up average, and then how the numbers fall on there. So since November of 2024, we have been pretty deep in buyer territory. The Crawford Market Index bottomed out at 72 in mid-July, but as of mid-September, it had climbed a little bit to 81. So if this pace continues, we could hit a balanced market by November. And that ends that kind of year-long stretch that we had of buyer-friendly conditions. So what does that mean for you? Well, asking prices have dropped for 4 months, but that decline just stalled about last week or so. So combine that with falling mortgage rates down from 7.26% in January to 6.27% in September, and you've got a little bit, you have a rare moment of leverage, I should say. So let's break this down a little bit. That 1% drop on the mortgage rate equals about a 10% drop in principal and interest payments. So imagine you have a $350,000 loan that you got in January. That is roughly, with interest rates, that's about a $2,400 more monthly payment. So with that 1% drop on there, now if you get that loan in September for $350,000, your payment is about $2,160. Add a 2% drop in asking price, and now you're looking at a mortgage payment of about $2,112 per month. And that's about a 12% drop or discount compared to earlier this year. And here's the kicker: over 60% of sales between $225,000 and $600,000 are seeing sellers covering closing costs, often including a 2-1 rate buy down. So that means, in year one, your payment might be $1,690. In year two, around $1,900 before taxes and insurance, of course. So to think about 60% of those sales between $225,000 and $600,000 had sellers doing some type of concession or agreement on closing costs or rate buy downs. So the bottom line is homes are, officially for sale. But if rates stay low and the market keeps climbing, your negotiating power could fade fast. So don't wait, I guess is the point. And always know that the right time to buy is when it's the right time for you. If you're sitting here thinking you can time the market, I'm not sure if I've ever seen anyone do that successfully. I'm sure probably, somebody's timed it, but it's going to be mostly out of luck on there. So let's talk about sellers. You've probably seen the headlines: recession fears, rising unemployment. All of that sounds kind of grim, doesn't it? Well, here's the twist. Historically, recessions have actually boosted home sales in Greater Phoenix. So sales increased during the 2001, 2008, and 2020 recessions. So why is that? As recession fears rise, investors flock to bonds, pushing down that 10-year treasury rate, and that pulls mortgage rates down with it. So lower rates equals more qualified buyers. And even with unemployment up, most people are still working and ready to buy. So that's good news for demand, but here's what you want to watch. More listings could flood the market as sellers want to capitalize on those lower rates. And that could slow down the Crawford Index climb towards balance. And remember that quarter four is traditionally slower for sellers, especially around the holidays. So one more thing to think about, luxury and retirement communities don't follow the same rules. These buyers often pay cash and rely on investment portfolios, which tend to take a hit during recessions. So if you are selling in one of those segments, expect a slowdown during a recession. Okay, so before we close out, I want to just run through the Crawford Market Index with you. So if you've missed some of my other videos where I've shown it or used it to talk about the market, I want to kind of revisit that really quick since I reference it in this video. Here is the Crawford Market Index. And I thought, since I just did a couple videos on Maricopa, the town of Maricopa, I thought I would show their Crawford Market Index. So this is the big gauge. This middle one here is what we look at as the market index. And it is calculated, the amount is, the range I should say, is calculated by looking at the supply index and the demand index. So what we see, so remember I talked about the bell curve, and so 100 is considered average. So right here we have our supply is well over the average mark. So we have a lot of supply here. And what we have is not a lot of demand or waning demand. It's not like it's down here near the 20s. So demand isn't that great. We don't have a very strong demand over here. And so that is pushing the Crawford Market Index down. So if we saw low supply and high demand, we would see a higher Crawford Market Index. So let's go over here and just look at just Greater Phoenix in general. So here we have not a ton of, a little less supply, but our demand, we don't have some great demand here. And so that's keeping us in what we're going to call, this yellow part is more of a balanced market. So just something to look at and to think about. Okay, so I said that I wanted to talk a little bit more about the Crawford Market Index. This is the most recent index of the top 17 cities in the Greater Phoenix Valley. And so what you notice here is, so we have the Crawford Market Index as of September 25th, 2025. And then you have the Crawford Market Index as the last month. So to showcase a change in here. And so we see a lot of cities that are making a positive change where the Crawford Market Index is going up. And so what we're seeing is we have a couple cities. We have really Gilbert, Avondale, Cave Creek, Chandler, Scottsdale, Paradise Valley, and Fountain Hills, all considered in sellers markets in here. So remember, anything above 110 is considered a seller's market. And so anything between like 90 and 110 are considered balanced. So in balanced markets, we have Mesa, Phoenix, Glendale, and Peoria. And then buyers markets are Tempe, Goodyear, Surprise, Queen Creek, Buckeye, and Maricopa. So it just kind of gives you a little bit of an idea. And so sometimes agents will, if you subscribe, I subscribe to the Crawford Market Index, but they also have a public page as well where you can look at some of this information and get some breakdowns of what is happening in the market in these areas. But I think it's worthwhile to look at when you see, we've seen a couple of these cities. So let's look here. Cave Creek did a slight drop from last month, but still in a seller's market. It didn't drop all the way down here into balanced or buyer's market. But what I think is important to note is when you look over here at Goodyear, Surprise, Queen Creek, Buckeye, and Maricopa, all in buyer's markets, what you tend to have there are a lot of new construction out there, right? Surprise has a ton. Goodyear has probably not as much as the others, but Goodyear has new construction. Queen Creek, Buckeye for sure, and Maricopa. I mean, we have a ton of new construction. So that means our supply, right? We have a lot of supply and maybe not a ton of demand. And so that's pushing those communities into buyer's markets. But some of them are pulling, going up a little bit, where we might see, like I mentioned before, a balanced market over the Phoenix Valley by the month of November. Something to think about, something to note. Like I said, I like to look at I like numbers. I think they're kind of interesting, and sometimes we can use numbers to say whatever it is that we want to say, but I think it's worthwhile to take a look at it. And if it's data that can help you make a decision and feel confident, but also to note what you're going to experience, right? If you are in a balanced or a buyer's market, your house is going to take longer to sell because there's more supply and demand may be down. So, demand may be fine for Maricopa, Buckeye, but the supply is making a big impact of it. So just something to think about. So whether you're buying or selling, timing is really everything right now. If you want help navigating this shifting market, reach out. I'd love to guide you through it. And don't forget to hit the like button, subscribe, and drop your questions into the comments. I'll be back soon with some more insights. I try to do this every month. I kind of missed September because today's October 1st. But, do what I can on sending out that information to help you make some more confident real estate decisions. So thank you so much for watching, and I'll see you on the next video.